Okay, everybody, this is Andy Gage with FiREapps. Wanted to welcome you to our session today. It's been a fairly momentous week over the past week here, given all the things that are happening in the markets right now as a result of the surprise Brexit here. And we really wanted to respond quickly and provide some insights that we're seeing in the marketplace and how various companies are responding to this. Just a little bit of Q&A or a little bit of administrative information here about today's session. We will be able to take Q&A. You should see a Q&A chat panel in your participant area there. If you have questions, our host, John Voppel, will be monitoring those questions and making sure they get routed to the appropriate people. The session today will take us about 30 minutes, give or take, and we're going to be focusing on some of the trends that we're seeing in the marketplace, some of the issues that are confronting treasurers and CFOs, and give some insight into some of our clients and how they've been dealing with this. As we saw the events starting to really unfold on Friday of last week, we took a very assertive steps to get plugged into our client base and really understand what issues they were worried about, what tactics they were taking to deal with this, and really wanted to provide some input and some perspective to the market in general about how companies are dealing with the headaches around this momentous currency crisis that we're seeing in the marketplace today. The team that is going to be helping me on the session today, myself, Andrew Gage. I'm head of market development here at FiREapps. Wolfgang Custer, many of you know, he's been he's one of the founders of the company, and he's very prominent in the currency market dialogue that's going on out there. He was most recently on Fox Business News on Monday morning, talking about some of the issues there, and CNBC as well as others. Over the last week, Wolfgang has personally reached out to hundreds of our clients, speaking with several CFOs and CEOs about some of the issues that they're concerned about. So he's going to bring some very fresh perspective around that, as well as some insight that he gained while he was actually in Europe as things started to unravel last week. And then Neil Griffiths, our head of services, has been also involved in several conversations with many of the users of our technology about some of the tactics they've been taking to deal with this and monitor the events, as well as providing some ongoing counsel to our colleagues in the marketplace. So we really wanted to kind of bring these two perspectives together and provide some insight into that. But as we step back and think about what's happening in the marketplace, one of the things that we know is a headache for about any company, and this is something that's been backed up by our friends at Deloitte Consulting. They've done quite a bit of research in this area, and they published a report several months ago that indicated that the visibility of the exposures and the forecast around the exposures is one of the largest challenges that are preventing companies from having really industrial strength risk management capabilities here. And the reason we bring that up is, in a situation like we're in right now, that's a particularly daunting reality to be facing. If you're sitting here right now and you can't really understand what's happening in the portfolio of currencies that you're doing business in, there's a lot of issues that are going to be flying by you that you really are not prepared to deal with. And so I think solving that problem is increasingly urgent for companies right now. And one of the reasons that it is urgent, if you had an opportunity to read the report from KPMG, also published in the last few months here, they did a phenomenal job of really tying the strategic importance of the role of currency risk management, the role predominantly played by the treasurer, to the bottom line financial results of any company. And without really effective risk management, you can really impact a significant percentage of your sales and your earnings by not having those effective practices in place there. So strongly encourage you to read both of those reports. I think they're fantastic reads for anybody that's really trying to understand the challenge that corporate risk managers have when it comes to dealing with currency risk. Now, if we step back and we think about what's happened just in the last year, as many as you know, several of you are people that read our quarterly currency report. We'll have the next one out here in the next few days here. We've had a tremendous impact over the last few years here, and currencies have continued to cause a lot of headaches. This is a view really from the corporates in North America and how currencies have really impacted their collective financial results here. And if you go back into that 2012 timeframe and you see what happened in the Euro crisis, there was a significant headwind on corporate performance there, caused a lot of problems, and then we sort of kind of fell into this area of relative currency mildness or moderate volatility in the marketplace. And I can remember sitting in London with some bankers in London, right before the 2014 ramp up on currencies, and everybody was talking about the fact that the euro dollar trade was moving in the smallest range of volatility it had traded in nearly 13 years. And then within a quarter, the wheels came off in the currency markets. We've had crisis after crisis. We've had the Russian ruble crisis. We've had the intervention of the Bank of Japan. We've had issues with the Swiss yen, and then we've had this really strong dollar play here in the U.S. And now we've got an even bigger headache on our hands with the whole Brexit strategy here. So it's a bit of an issue for many companies. And the problem for companies, and I think this is a really relevant slide for just about anybody that's dealing with these issues right now, is that in any given quarter, it could be any number of currencies from any part of the marketplace that are causing people a lot of headaches right now. And certainly the euro for U.S. corporates has been a major source of pain, but we've seen volatility in CAD, we've seen volatility in the sterling, and what we saw even coming out of the initial results on the results of the Brexit, obviously we saw a huge move in the sterling overnight, and then we saw big moves against the dollar and the euro. I think the euro is trading at about 110 right now. But we also saw very strong strengthening of the yen as companies and foreign exchange holders were trying to find safe haven currencies to park their money in. So it's been a very turbulent week, and it couldn't really have come at a worse time for corporates because they're out closing up their books for the quarter. They're looking at their hedges, and many companies are caught in a very difficult situation. And I would expect as CEOs and CFOs go into the next earnings session that if we look back when things were happening with the ruble, the issue that was top of mind in every analyst call that CEOs and CFOs were having with the market was what's currency doing to your business? How well protected are you? The analysts have become much more sophisticated over the last few years here as they've dealt with currency crisis after currency crisis. So I would expect the number of questions that are coming into the next round of investor meetings are going to be very focused around how currencies are impacting and what steps corporates are taking to shield themselves from the foreign exchange impact. So as we kind of draw that picture of what's happened in the last couple of years and we think about what's happening in the market today, I want to bring Wolfgang in to give you some fresh perspective on what he's seen, and he's looking at this from a number of different dimensions. He just came back from Europe where he witnessed this whole thing unravel. So Wolfgang, I'd like to welcome you into the conversation and let you share your thoughts and what you're seeing in the market and provide some counsel to the callers today.
I guess, starting off with thinking about Brexit, we really need to think about what happened leading up to it. And what happened leading up to it, there's a lot of speculation going back and forth, as we all know, and at the end, people weren't expecting this to happen, but it was always going to be close. I think one of the first surprises here was how unprepared Brussels was in order to react to this and really got them to a point where there's no way backwards. I know that there's some communication going on about a 3 million plus signature referendum to be rediscussing this, but fact of the matter is that David Cameron is already, as we all know, is already resigned effective September. And the only real delay now is after this big surprise is that the Article 50 will likely not be implemented till or executed on until September. But I think what's really important here as we go through this is not to just focus on the sterling. We're going to certainly do that, and the immediate questions that have come up of CEOs, CFOs, and boards, as well as obviously the Treasury area, what does it mean for the sterling, and then, quite frankly, what does it mean for the euro? I guess my first part, and I'll reiterate this through year, is I recommend that nobody takes their eyes off the rest of the world. I think that probably the next domino is likely going to be the euro. But if I go through these points as it is here, it's clear that this is, typically these markets are driven long-term by economics, but currently they're really driven by nationalism, and we've seen that certainly with this vote. We've seen it, quite frankly, in the United States, and we've seen it in many countries. You see states within Germany starting to go nationalistic. That brings back bad memories, but also whether you're talking about Holland, they're talking about already a referendum. What's interesting to note here is that not every country within the European Union has a clear democratic referendum, such as the UK and Netherlands does. Germany, for example, does not. It still has a parliamentary referendum, so you can't get a bunch of signatures and kind of do something around this. But here, this is really about nationalism versus economics, and people, when you're in Europe, you start realizing the impact of immigrations that it's had on, Italy is probably the biggest surprise. We're still having over 2.5 million immigrants there. Germany has obviously been probably most prevalent in the press with over 1 million. Then on the unfortunate events that have occurred in Brussels certainly don't diminish this. I think when one looks at this and sees this movement of nationalism within every European country, you really start wondering about the euro and the European Union. And, I've spent, and if maybe we can just go back there for a second, but if we spent, I've spent some time even in countries such as Portugal, and people are very disenchanted with the fact that they're in the euro, but they're paying higher interest rates, and so they're actually getting the worst of both worlds. They're getting a strong currency, and they still get punished with a higher interest rate. The really important part here is probably the third part, which is increased continuous level of awareness among executives. I think if I look back 5 years ago, CEOs and CFOs really weren't A, as focused as they are today, for sure not, and B, weren't getting the questions from the boards and the analysts, more importantly, for publicly traded companies about this. And I think that that's part of what we're really going to dig into today, and in Andy's session as well as in Neil's as well. Safe haven currencies, I think probably the biggest surprise to anybody in here was Japan. Everybody, I think, expected dollar strength if this was going to happen, but the yen was going to strengthen. That wasn't going to be surprising. I think the one thing that people are not focused enough on yet, and it already occurred, is China. China had the largest move in their currency since 2010, immediately after Brexit. And I think that people keep, as the dollar continues to strengthen, and we all know that the Chinese currency is obviously tied to the U.S. dollar. If the U.S. dollar, for example, appreciates another 10%, the Chinese can't afford to have their currency strengthened by 10%. So nobody's really focused on this yet, but this is likely an area where you're going to see much more increased volatility and likely to be the next domino. I think the euro breakup maybe is a 2 to 3 year out, maybe that far out, but China is in my opinion, pretty imminent. So if we can now, go to the next slide, that'll be great.
Yeah, and Wolfgang, as you think about this and the conversations you've been having with CEOs and CFOs, which of these causes you the most sleepless nights as a CEO of an international company?
Well, I think that probably the biggest one is the inability of what is happening in Brussels and the in the UK overall. So you have, today they're making noise about the Bank of England actually cutting rates. So the uncertainty is probably the number one issue. The number two issue right now is China to us, and then all the operational and structural areas that we'll go a little bit into what this really means when you set up companies. As you know, we have subsidiaries in the UK, we have subsidiaries in Germany and many other countries, but now you have to wonder what are the treaties going to be like, what's the tax impacts of this, and what the operational part is. How do you do intercompany loan structures and all these sort of things? But the news is you start with the data. Really, let me see what the exposures are. Let me see where we're doing business, how business currencies are flowing through this, and then let's start looking at it from a financial, structural, and operational point of view. As you see right here, and I completely agree with this, we're in a new volatile market, and we may see August, come off a little bit, probably not as much as we've seen in the past. August is really getting quiet, but we're in a volatile market where uncertainties, where these moves of 142 to 150 back down to 130 in the sterling within hours will not be unusual. And I think that typically you've seen directionally, you'd see a 140 going to 132. You typically wouldn't see a 140 going to 150 before it goes to 132, and that within hours. I think that this is really key here is anybody who's doing what they were doing 5 years ago, still today, it's almost, if I may put it, is almost insane because you're expecting within a very different market your same processes creating the same results. And obviously the part here that isn't working is if the markets are changing, you got to look at improving these processes, improving, quite frankly, the communication to the decision makers because that's really important here. And then when you go at what does it start with, it always starts with, as I run a firm, the first thing I look at is what's the data, what does the data tell me, what's the story here, and I want to ground myself in that. So I want to know that I've got complete data, I have accurate data, and I need that in a timely fashion. I don't want to sit here today wondering what my exposure on the sterling wars were. I really wanted to know this on Friday. So really complete and accurate, timely data, and then really have transparent processes. As I've talked to CEOs, they're talking about not just the currency impacts, but then the logistics of that, supply chain, sales, all these areas that means. And this leads to the final point here is it's absolutely about finance, but it is also about then what do I do structurally and operationally to change things? Do I need to change productions? Do I need to change intercompany loan agreements? Do I need to change tax structures? Now I need to watch 26 or 27 different trade negotiations over the next years, and is that really the end of it? And that's going to be a nightmare. And we all know that the Wall Street Journal is having a great time with saying the lawyers are really going to do well with this. And then as one prepares for this, and I think that just continues to be the fact, we've seen so many crises over the years since we started here in 2000 at FiREapps. Really, these crises are increasing in numbers, and I think it's more important than ever to really have that data at your fingertips and really understanding it, and with that, revisiting. Quite frankly, I had a CEO discussion, $25 billion revenue company, and they definitely are into now looking at what assumptions did we make for our forecast for the rest of the year and beyond, and do we need to change any of these assumptions? And for that, I need some data, I need some ability to model that. And therefore, that leads then to, well, what scenarios do I have? Do I still keep my headquarter in the UK? And what if I redenominate that into euros, et cetera, and really run a lot of abilities? And that's not just going to be a treasury area. That's going to be FP&A involved as well as I look at all these things. And the policies, in this environment should be revisited by the board, certainly on an annual basis, and revisited internally with the Treasury and the CFO on a quarterly basis. Where are we with this? Are we getting the right information? Is the policy adequate to, quite frankly, at this stage, I would recommend anybody that's in the Treasury side, make sure that these policies are guiding you correctly, so nobody comes and says, I didn't know. So really, be proactive in communicating the risks that one has, both on the balance sheet and through the P&L, and the guidance from them of what to do or not to do. I know I was in Europe when the Russian ruble crisis came as well, and there are a lot of people who got pretty upset about when they didn't know that they weren't hedged on the Russian ruble, but in reality they said, well, but that was very expensive to hedge, so we didn't hedge it, so they were defensive. And I really, in this sort of environment, encourage everybody to be proactive with senior management, because often they don't even know how to ask that. What is the question that they're going to ask? And so the questions of what are you going to ask, what are the 5 questions, we're going to go through some of those. Those are the basics, but I think you need in today's environment an environment where you have a platform that really helps you do a lot of great scenarios, not just on the derivative products, but much more importantly on the underlying data. How do I have to look at this? And who knows whether the next question is going to be about the euro and the breakup thereof, or whether it's going to be China, or maybe it's going to be Brazil. What is the next question? And you got to have an environment where, as you, Andy, know, our customers, they went home with no problems on Friday afternoon after Brexit saying, yep, we did the reporting, we pulled out certain things. I think you're going to show some examples of that. And we brought that to the board. And I know I saw a few emails coming back from customers saying, yeah, they were pretty nervous at the senior level and we're very calm going into the weekend. So that's it. And then at the end of the day, we've seen this forever. And Andy, as you know, we listen to and have for years listened to thousands, literally thousands through the analysts, thousands of earnings calls, and really charted of what are the analysts asking. Now, one, we know they're asking more. More of them are asking questions. We also see the trend that those questions are much more clinical, and we've developed this Flash report which gives the CFO and CEO the comfort to go talk to the street if they're publicly traded, certainly otherwise to their investors, that they have this under control and that they understand it. Even if the question may be a little too clinical, they can go back to this. And this Flash report covers roughly 90% of all those questions that we've seen in the past.
So thank you, Wolfgang, for that. Let's bring Neil into the conversation, kind of looking at this more from an operational day-to-day reality for many of our clients. Neil, why don't you give us some insight into some of the tactical things that you've seen people doing and sort of what the reaction from our client base has been over the last week here.
Yeah, thanks, Andy. I think certainly something that I've seen coming out of the client base is to reiterate something that I know that we've been speaking for many weeks. Organizations absolutely need to be fully currency aware, and I think to reinforce what Wolfgang was saying was we actually saw many clients reaching out in advance of Brexit. We had a German client reach out asking for specific views that they wanted to share through the last week with management to ensure that they were very comfortable leading into the events that unfolded on Friday. And I think Wolfgang's point. We've spoken to many clients who said we had answers last Friday. We shared that internally. We shared our gross exposures, the hedges we put in place, and therefore how we'd eliminated significant risk. In many ways, it was business as usual. Some of our clients that we've spoken to as well were using that analytical power to then make very intentional non-hedge actions as well. We saw some clients converting cash specifically to eliminate sterling exposure, settling into company payments because they had that visibility. So I think the key point there was very intentional, and the clients that we've spoken to had comfort with their current processes and the ability to develop specific reporting internally to management so that they could communicate very clearly and quickly.
So, given that framework, perhaps you can kind of walk us through some of the analytical concepts that you saw as most applicable, and where were they focused on in trying to understand how currencies were impacting them.
Yeah, absolutely, Andy. And it's having that foundation of that analytical environment that's so important. I will say I think there's a couple of learnings that I think we've already somewhat touched upon in the discussions so far. I think there was a lot of focus on the FX gain loss impact immediately. I think that many firms are realizing, as we've seen through the euro crisis and is reiterated again with Brexit, that being currency aware means that you need to understand the impact of currencies across the entire income statement. And I think the other point that is really important, and something I heard several clients saying was that point that they were surprised about the breadth of impact, the currencies that were impacted, not just in sterling, as we've spoken about previously. So what we've done is we've created a series of views and usage of the FiREapps technologies to prepare a rapid response analytics to really help organizations answer the questions that treasurers and CFOs are asking, and really trying to get to delivery of that currency awareness and exposure data in days, and really allowing the opportunity to view internally what actions can I take to quickly react to organic actions, not just for the sterling, but potentially, as we've been reiterating, what other currencies may be impacted next. And leveraging the technology to really provide that clear analytical viewpoint. So some of the awareness that we've seen and clients and prospects have been asking about, we're really trying to enrich that, and to show you a couple of the examples that we saw coming from clients and a part of this impact analysis. You know, having the ability to very quickly look across the organization and say, you know, what currencies am I actually conducting my sales in, and where do I have the greatest risk? So being able to, as this example here, identify that internal sales, the significant driver of that is sterling. And then to actually not only just say how much of my sales are in each currency, but being able to compare. And so using the variance analysis, we saw a number of clients who were able to then look at those sterling sales. And on Friday, they were able to look and say, what was the impact of currencies period over period, and how much of that, you know, in this case, if I look at the first row, my sterling variance was almost $8 million, but being able to identify how much of that was true volume driven and how much was as a result in rates, and immediately being able to see the impact of that 9-cent movement in sterling representing almost $3 million of translation impact. So some of the other things that we heard from our clients was really wanting the ability to segment their business. You know, we had several clients who were looking at and reporting internally what was their exposure based upon different segments of the business. Several clients were looking at what are my exposures in sterling functional entities versus the non-sterling functional entities, so that they could really quickly identify which entities had sterling exposure and start drilling there to see if there were opportunities in advance of any decision to become currency agnostic. The other thing that you know, we heard time and time again from clients was the ability to monitor and compare exposure trends. We had clients who were pulling multiple data sets, exposure sets, and multiple rate sets throughout the day, several times a day, quite specifically so that they could communicate how their business was being impacted and what the impact of currencies was throughout the days leading up to the Brexit event last Friday. And I think the other thing that I would highlight here, much as we saw the impact from a translation standpoint, you know, really people looking at their balance sheet exposures as well and wanting that same level of understanding as to what is the overall impact across my balance sheet exposures, and being able to readily identify where those exposures came from. And back to Wolfgang's point, is there an opportunity to restructure any of those transactions so that I can mitigate risk on a go-forward basis? And Andy, I think the final thing that I would talk about is we saw many clients who were running FX gain loss scenarios, intraday FX gain loss scenarios, to say, given that sharp movement, what do we anticipate our gain-loss results are going to be, and how is that going to be impacted by the decisions that we've taken. So I think those were some of the key views, and some of the things that I wanted to highlight is this wasn't just activity going on last Friday. In the variance analytics, we had clients introducing scenarios so that they could be monitoring what would be the impact of a 5 or 10% movement in sterling for many weeks leading into last week's activities. And then go ahead, Andy.
Yeah, I was just going to say, and then obviously, trying to understand where they are from a hedging standpoint, making sure the coverage is in place. I think that's also a key aspect of this as well.
Absolutely, absolutely. Being able to very quickly communicate to management, we know what our exposures are, we know what actions we've taken, and therefore this is why we're able to go to bed on Friday night. Yep.
Well, Neil, as you and Wolfgang kind of step back here, and I know Wolfgang's going to be pressed for time here. He's got to run out to meet with another CFO here shortly. But perhaps we could just kind of talk about if we're giving some recommendations on guidance to senior executives on what to do given what's happened here. Maybe walk us through some of your thoughts on this. And Wolfgang, are you still on with us? I know you're about to head out the door.
Yeah,
okay.
Definitely. No,
why don't we start with you, because I know you're on a short time frame here.
Yeah, I mean, I think that, and it's in preparation, literally, as you said, I have at the top of our meeting with the CFO, it's really talking again about, okay, what does it mean, and what are the current exposures and risks? You've made decisions, in this case, they made decisions not to hedge some of their revenues, for examples, and they've made decisions to hedge some of their expenses on other sides. But really, now, given what's going on, you need to, let's revisit what risks are you willing to take and not, and I think that's probably the number one thing. And definitely, it's going to be throughout the entire income statement, and then therefore obviously the balance sheet part of this thing, and really what are the impact of the recent moves, and what then happens. Have you thought about China? Have you thought, what does that mean if something happens in China, which is to me pretty inevitable? And then really sterling and euro, what are you thinking about? That company has their European headquarters in the UK, and they now have to start thinking about, and they just set this up about less than a year ago. Now they have to think much more about the sterling euro rate. And then the hedge coverages, and I think this is really important what happened prior, and Neil, you and I talked about this. The customers that called that may have been, said, well, we'll be 85, 90% hedged. I mean, from what I heard and from what I see, just let's go 99% hedge. We know what the exposures are. Let's do that right into Brexit, on the euro, on the sterling for sure. Those were two pretty obvious ones that were, for them, pretty easy to adjust and get to 99% hedge ratios. And I remember many years ago, very, very prominent companies said the same thing to you. Was one of our first customers who said, well, we started seeing the euro crisis coming, and I looked at that, and we just went to 99%, made sure we were there, and that made him look pretty good to the CFO, quite frankly. And then again, its natural hedging abilities is really, what's my business doing, where do we need to do, and how do we need to maybe reposition the business, not just from production point of view, from sales contracts point of view, from intercompanies point of view, from tax point of views, et cetera. And then, what are our current impacts as a result of the Brexit-driven moves? I mean, these are the 5 questions that are kind of the minimum questions that we should prepare the CFO for in order to get into any meetings or analyst calls. But then there is the very specific questions that are going to come from the board. Is what is the true risk that this exposure does? And I think that's what the last thing I would really emphasize here is, don't just talk about the volume of exposure, but really talk about what that could mean generally, at least from a risk perspective. It doesn't need to be super precise, but saying $100 million against China is obviously different than saying $100 million against Brazil, and really help them understand it, and then really think about what does it take to, because that's the next question, what would it have cost to actually manage that risk? And I think that's really important when you go into the meetings to be able to say, just like the Russian example that I said earlier, to be prepared for all this. Those are kind of the CEO, CFO things as I'm seeing them. What about you, Neil?
I agree with all of those, Wolfgang. I think the key that I would sum it up with is having the ability to be very intentional. And that's having the understanding of the data and confidence in that data is what allowed those clients to increase the coverage ratio to almost 100%. and to have confidence that that was going to have the intended results. And I think that's the biggest thing that I would take away from this is you can only be intentional when you have the analysis in a timely fashion and have confidence in that.
Gentlemen, I think the other thing that's worth thinking about if you're facing this dilemma is the different constituents that are going to be asking questions. A lot of times we focus on the conversation with the board or the investment community, but depending upon the impact of these large directional moves, there may need to be very serious conversations with bankers in terms of debt covenants. There may need to be conversations with local plant managers in terms of how this personally affects their management objectives, as well as the broader employee staff. So maybe you just kind of touch on those points there as we move into the close up here. Neil, any thoughts on that?
Yeah, I mean, I think again, there's got to be that clear, concise communication, being able to communicate specifics. I think the other one that I've heard specifically this week, the other constituent is within the CFO organization is a lot of teams are looking at from an FP&A perspective. We set a budget rate or a plan rate for the year. Given this, do we need to reset those expectations? And how do we model how that would look as well? And so, Andy, I think there's a lot of open items that the Treasury teams and CFO broader organizations are dealing with as they move through the planning process all the way through procurement and manufacturing and sale.
Yep. So as we close out here, we've touched on this concept of the CFO Flash Report. And this is something that we can assist companies with in trying to pull together a comprehensive understanding of how currencies are impacting them. And I think really what this speaks to is obviously there's going to be a lot of questions about the sterling. There's going to be questions about the euro. But at the end of the day, you still need to understand your risk from a portfolio perspective, because there's a lot of moving parts here, and you really need to understand and assess and communicate the impact of the risk across the entire income statement and across all the various currencies that you transact in. So this is something that we can set up as a follow-up for any of the corporates here that are interested in getting into a more thorough discussion on this. And I think from that standpoint, we may have had one or two questions that had come in the background there. I'm going to see if I can see the questions here real quick. Okay, so we had one question here about surprises that we would envision on calls, and if there's any issues that we would expect CFOs and CEOs that could trip them up that they should be prepared for. I don't know, Wolfgang, if you're still there, or Neil, any thoughts on questions that could come up?
Well, I mean, I think what I have already been hearing across the client base, and we've touched upon this a little, is many firms are rapidly quantifying the impact that sterling had on them, but people are really trying to calculate, what was the impact on some of those other impacted currencies, and for many of them, a smaller percentage-wise movement in the euro was a far more dramatic impact than the sterling impact was, and it was something that I think that went unforeseen, and so I think there was some less actions taken in anticipation of that. So that's certainly something that I think is going to come out as questions either from the CFO or from the investor community, Andy.
Okay. I didn't see any other questions come in. I know we're right up at the end of the hour here. So let me offer a few closing thoughts here. If you're a company that's interested in understanding more about the rapid response analytics and our capabilities, you can certainly contact us either via email or the phone number listed here. If you're interested in receiving a copy of the slides today, you can also send an email into that info@fireapps.com, and we'll try to accommodate your request on that. We will continue to provide a lot of input into this conversation. We'll probably have another follow-up webinar next week at roughly the same time as things continue to unfold. and we'll make that available to people. What we most likely will record that, and if you're interested, we can make that available to you as well as we get more input from corporates and other constituents out there. And if you just really want to stay dialed into our overall conversation in the marketplace, we publish a monthly newsletter called the FX Gazette, and you can certainly sign up for that on our website in our blog. So with that, Wolfgang, Neil, I appreciate your time today. We pulled this together in very short order because we've had a lot of questions and we wanted to provide some visibility and insight into the marketplace. We thank everybody that's attended today, and with that, we'll close our session. Thank you all.
Thanks, Andy.